The first thing I wanted to compare these two on is revenue growth. Alphabet has done a phenomenal job boosting its revenue from $75 billion in 2015 all the way up over $371 billion in the most recent trailing 12-month period. Now, what makes this even more impressive is most of Alphabet's products are free, and they're generating this much revenue on services that they offer for free to customers and then generate revenue from advertising. That's truly impressive that they've been able to create products and services that they can give away for free and still generate sufficient profits and cash flow to support the business and support the growth of the company. Meanwhile, Broadcom has increased its revenue from $6.8 billion to $59.9 billion in the most recent trailing 12-month period, and Broadcom has told investors that they're finding great success in the build-out of these data centers optimized for artificial intelligence. Furthermore, Broadcom's most recent acquisition of VMware is working out really nicely, and the company's management team is finding synergies relatively quickly. Now, when companies make acquisitions, they often hype up those synergies, those cost savings. That makes sense, right? If you think about it, if you already have a marketing department, an accounting department, a finance department, a legal department, and you make an acquisition, you don't need to bring on board all of their team members in those same departments as well, since you already have those functions in-house. And so when you bring the company over and you bring the team and the staff members, you don't need to bring everyone, and you're still getting all of the revenue that that company was generating, but now with less of the cost because you're sharing the cost across a wider business. And so the cost to serve each customer decreases and the cost per revenue or the cost per dollar of sales goes down meaningfully. Broadcom, I will say, has been one of the best companies at realizing synergies after making acquisitions and paying reasonable prices for their acquisitions. The next metric I wanted to compare these two on is the return on invested capital. And in this regard, Alphabet, way better than Broadcom at 30.4%, more than double that of Broadcom at 14.4%. But Broadcom had been making great improvement up to 26% before the acquisition, and it's reasonable to assume that its ROIC will return to those trend lines and those levels from before the acquisition, as the early signs indicate the company paid a reasonable price and they're finding synergies from the VMware acquisition.
Click the link below to watch the full video.